All right, good morning, folks. It is July 20th, 2023, and we have a real estate reset underway. I want to make sure that you guys can take advantage of it. This is an asset class that impacts everybody, so I love talking about this one. We have first-time home buyers, real estate investors. We have folks that are just renting, folks that are homeless, maybe trying to get back into a house. Hopefully that's not you, but we got to talk about it. Real estate reset is underway, and we got to go through the numbers, the lies, the manipulated data, and get to the truth, so that we can take care of our families and actually, grow our investments in this asset class. So we start off with the fake, phony numbers and datas and the story that is being painted by the mainstream media. We're starting off with the jobless claims dropped to a 2-month low of 228,000 as labor market is still going strong. Now, I don't know many people who thinks that the economy is going strong, other than folks that still have a nice, cushy job working from home and thinking that everything's going good as they live in la la land. When you look at the real situation, what's happening here is folks are getting a second and a third time job. They're driving Uber at night. They're delivering food. They're, doing whatever it takes to make sure that they can keep on feeding their family. Because as we warned about, the inflation is not going away. And then we warned about the high-flying tech jobs and all these six-figure work-from-home, do-nothing jobs. That party's over. The participation trophy economy's over, right? You don't get free cereal at Amazon anymore. You got to bring your own cereal or whatever the story is, right? We saw those TikToks that were shared over the last 2 years of just basically the joke that has been taking place with the United States economy and the fluff, right? Just the fat that is bound to get trimmed off. And you're seeing it happen in real time. And I'll show you what I'm talking about. I'm not just speaking on this, because I want this to be the case. This is the reality. And in an area that I know so well, Seattle area's workers' paychecks shrank in 2022. Why? Tech. And so, as I was saying, these are high-flying tech six-figure jobs, right, that are having significant cuts, right? King County wages were actually down last year. Truly incredible. And now this is one of the real estate markets that we're seeing correct in a major way, and for obvious reasons, right? When people are losing these really good jobs that they had, and they're forced to now go get two jobs to replace, only probably, 3/4 of the income that they were making at this tech job. That's not a strong economy, right? People are losing good quality paying jobs to go work 2 and 3 service sector jobs just to try to get by. And now, let me be clear. I'm not hating on service sector. I'm not hating on Uber drivers, any of that, right? Not hating on that at all, whatever it takes. And so this is a situation that we're seeing continue to spread. Seattle is just one example, but this is happening across the country. And this is also reflected, once again, another data point to confirm it, by the federal government tax receipts are plunging. So you look here, federal government receipts, year-over-year percentage, we have dropped back below here, this level, and you can see that we were in a recession. And basically all these times that these federal government receipts went down on a year-over-year basis. So this is being confirmed, right? Folks are losing their jobs. The tax receipts are down. That is not a thriving economy, but they continue to try to say that it's all good. It's all rosy, right? And then the same thing is taking place with the real estate asset class and the real estate data that's being reported by the news as well. So we look at this. The existing home sales just came out this morning, and they did retreat 3.3% in June, but last month was the monthly median sales price reached the second highest amount ever. So literally, folks, we were literally back to almost all-time high for prices. And so the mainstream, right? And remember, there's so many people that are incentivized to speak positively on real estate. Think of all the real estate agents. Think of everybody that's tied up in the real estate asset class as their business. They really want to see. Now, the real ones understand that we go through these cycles and they prepare themselves accordingly, right? And when times are good, they stack their chips on the side and they get ready to buy the blood in the streets, which is inevitably what comes. We couldn't have 0% interest rate environment forever. Many folks saw that and prepared. Now they've raised the interest rates at the fastest pace in history, and the mortgages are back up to a most recent all-time high over the past couple decades, above 7% for the average home buyer. You cannot afford these home prices at a 7% mortgage rate. It's just the numbers don't line up. When you look at wages falling, when you look at the median household does not make, six figures plus, which is what is required to afford the median house, right? The median house average price reached the second highest amount ever. But existing home sales did drop 3.3% in June to a seasonally adjusted annual rate of 4.16 million. Sales trailed off by 18.9% from 1 year ago. At $410,000, the median existing home sales price for June was the second highest price ever recorded since January 1999, when the National Association of Realtors began tracking the data, and a 0.9% less than the all-time high from 1 year ago. So just less than 1% 1 year ago, which was $413,000. So, for all intents and purposes, we went back to all-time high this year. It was the third time the monthly median sales price eclipsed 400,000, joining June 2022 and May 2022. At 1.08 million at the end of June, the inventory of unsold existing homes was unchanged from the previous month, or the equivalent of 3.1 months supply at the current monthly sales pace. Now, what does that mean? It means that folks are trapped. They can't sell their home because then they're going to have to replace their mortgage with a mortgage that's, 6-7%. It's double that 3 or 4% mortgage rate that they locked in over the past, few years or the past decade, right? And so this is what I'm talking about with a real estate reset underway. And now I summarized it in this tweet. I said Q2, because Kobesi Letter asked this question. Housing market versus stages in a bubble. Is a new bull market forming for housing prices? And so here are the two charts. I'll show you guys these real quick. This is the percent of homes sold above list price. So you can see that we got quite a few homes being sold above list price, 33% in June of 2023. Pretty incredible. And then we look, this is basically a chart that you guys have seen many times, I'm sure, right? The cycles and stages of a bubble. But, I summarized it here in this tweet that I put out. I said, Q2 is always peak selling season, and there is still a shortage of quality homes. New home builders bringing a record supply to an economy finally admitting recession. The real estate reset is underway. So, folks, this is what we have to understand is that this is always peak selling season, Q2, that's April, May, June, right? But we did see that the existing home sales are still, we're still down to levels that we haven't seen since January of this year. And the prices, although they remain strong, right? You see what's taking place. There's a there's a shortage of quality homes. And so there's actually still bidding wars taking place in some markets. And so that's why you see 33% of sales over the asking price. Now, what you're seeing though is that there are not as many new homes coming on, and the inventory is growing across the board, right? But the properties aren't moving; they're sitting there. And really, when you look in and you home in on, like I said, the new home builders are driving the prices lower because they can offer incentives. They're doing rate buy downs to help keep, which is actually helping keep prices elevated because they're still selling the home at that asking price or slightly discounted, but they're buying down folks' rate. They're offering different incentives to make it easier for the folks to go into that new home. Now, I believe, I don't have the numbers in front of me, but the new home builders, new home construction is actually down from the peak of last year. I think 10 to 20% depending on the markets. Okay. So the new home builders are actually driving the prices lower because there's a record amount of home building that's been taking place. So like I said, you have a record amount of homes being brought online by the builders as we enter recession, as the tech workers get laid off, as folks are working their second and third job just to get by, right? And so this new supply that's coming on is coming onto a market where the demand is not there, right? And so this is going to be reflected in prices continuing to move down throughout the rest of this year and into next year. And so this is going to be an incredible opportunity for folks that are looking to partake in the real estate reset, right? Now is the time to approach these folks that are getting desperate, and you can offer them a way out. You can offer them a solution. And so this is what I'm looking to do, and I hope that you guys are preparing yourselves as well. Once again, confirming everything that we're talking about here, home price to median income ratio is at levels higher than even the 2008 housing bubble. Let that sink in. So the home price to median income ratio at the highest level ever. Now, when we look at commercial real estate, panic hits Baltimore as second office tower dumped at 69% discount. So you're seeing, not all markets are created equal. Remember, I always try to put out that caveat. But when you look at some of these cities and in particular the commercial real estate, 69% discount, right? So, I mean, throw out all the numbers that I just gave you about 10%, home builders, dropping prices 10 to 20% compared to last year, right? That's for the home builders in suburban America. When you look at the cities, when you look at office and commercial real estate, there's a reason why I say that it's the sacrifice of commercial real estate in some of these cities, 69% discount. You're seeing it across the board, 50, 60, 70, even 80% in places like San Francisco. This one is here in Baltimore. We look at this case right here. Starwood is defaulting on properties in Atlanta of all place. There's a lot worse to come in the commercial real estate market. Starwood defaults on $212 million Atlanta office mortgage. And so you're seeing it, folks. This is going to be a huge discount. And one of the opportunities that I'm looking at in real estate is commercial conversion. So I've said, I'm not looking to be the one that converts these office buildings into coffin apartments, but there is going to be an opportunity to convert these into, some sort of other business, some sort of other utility, or, you could convert it to apartments or housing. I think that many folks want utility affordable housing, and that there is still a shortage of quality affordable housing, right? So once again, this real estate reset is underway, and it's only going to continue to get better from here on out. We just reached the peak selling season. Prices were back to all-time high because we did have relatively speaking, we had a lower inventory. So for good homes in a good neighborhood, there was still a bidding war. I'm seeing it in my neighborhood. Every house that we're interested in for our family, we go look at it. And the last 3 open houses that we went to, the property went pending the day after the open house. And one of them actually sold for $15,000 over asking. And so I'm telling you guys right now, it depends. Not all markets are created equal, but when we speak generally across the board in this country, right now, everything's going to have to be readjusted. And so we need to be prepared with cash on the sidelines, with our relationships established, with our real estate brokers, property managers. If we're looking to invest in real estate, we want our contractors ready to go, folks that we can count on to get real deals done. Many people are going to be folding who thought they were real estate investors. You're seeing that the iBuyer programs have failed, with the Wall Street and the hedge funds looking to come in and buy up neighborhoods. Now, the thing is, though, they could afford to take the losses, and they still have cash, and they're still buying up neighborhoods. They're still buying up whole communities. So we're going to have to watch this one closely. But for me, what we're seeing on the macroeconomic currency war stage is only going to make this situation worse. And so we're getting ready to move throughout the rest of this year. Now, what am I talking about? I'm talking about this. 22 nations have formally applied to become members of the BRICS economic bloc. The list is growing by the day. So now we have 22 nations that are looking to join. JP Morgan strategist says market fails to reflect threats to dollar dominance. Once again, it's only getting worse from here. In May, China decreased its holding of U.S. Treasury bonds to a 12-year low. This is the second largest creditor of the United States. They are stockpiling gold. China is now warning that foreign trade faces extremely severe situation, paper versus commodities. Now, this is reflected in the DXY, which just rolled over, right? It was back up at all-time high in about September, October of last year. DXY was up to about 114, 115, I think. And now we're back down to about 100. Building up a little bit of support here. But if we break through and we make the next leg down, you're going to see gold and silver absolutely rip. But then the cost of everything for Americans is going to go back up, so that inflation is going to return. Remember, so I'm trying to paint this whole picture together and tie it back to make you guys understand why I think that our economy is already in recession and it gets worse, and real estate reset's already underway and the opportunities get better. Right? Yeah, you could say that real estate gets worse, or you look on both sides of the coin, you could say the opportunity gets better. Right. And so that's what I'm trying to explain right here through all of this data, all of the things that are taking place on the macroeconomic level. And then with all these countries dumping our treasuries and the dollar losing its strength that it had, this is the chart that we're looking at right now. DXY has made it back to 100 as forecast. It could extend to 101.70, 102. But when we break the low of 99, my primary target of 92 comes into focus, and it's game on for gold and silver to $2,400 and 30 plus an ounce respectively, in my honest opinion. You'll wish you owned, well, those are some stocks, but this one's shared here by David Brady. And so we're watching this DXY closely. JP Morgan confirms we remain structurally long-term bullish, both on gold and silver prices as we approach the likely end of the Fed rate hiking cycle. So this is the only thing that's going to give relief to the real estate market is the Fed pivoting. I don't expect that to come till next year, but in the meantime, it's going to get really tight. It's going to get really hard. And so I'm watching this window right here as we roll into the fall and into the winter. If the recession rears its face and, makes its way and it's, finally admitted, like the Fed is saying that we're going to have a mild recession now, right? Just like we were going to have transitory inflation. Now we're going to have a mild recession. That means it's going to get pretty damn bad out there, right? And so we got to be prepared. I think that we have this window of opportunity from basically now until the beginning of next year. And I don't think that the market will start to pick up again until spring of next year. Spring, we'll once again get another tick up, relatively speaking, because that's always the peak selling season, just like we experienced this year, right? Q2 peak selling season. But if that is coinciding with the Fed pivot taking place as well, that's when we could start to see some relief in real estate. But in the meantime, from here until March of next year, this is just downward pressure. This is just recession. And for us, like I said, the opportunity only gets better. And so we're going to be taking advantage of that. I hope that you guys are ready. It is confirmed that the real estate reset is underway. And I don't share this to be spiteful because, I just want to buy a house on the cheap and I just want to be able to buy all these deals. I think that what we need to go through is going to be healthy for us, right? This is not affordable. This is not sustainable. The average American family needs a place to live, and the market's going to provide that. It's going to have to do some adjusting, and a little bit of a reset's going to have to occur. And so we got to own up to that. We got to accept that, and we got to lean into the opportunities. That's what I'm going to be doing. I hope that you guys enjoyed this session, and I will see you guys in the next one. God bless you all. Thank you so much.